Technical analysis for November 11th to 16th. I hope you enjoyed your long weekend last week and were able to remember the veterans on Remembrance Day. Let's jump right on in to our charts. Here we have the 3-year weekly chart for the Toronto Stock Exchange. And as you can see, for the last 1, 2, 3, 4, 5, 6 weeks, we've been in an upward trend on the Toronto Stock Exchange. So obviously, the MACD and the MACD histogram are loving it. Both are trending higher. You can see for the last 3 weeks, the bars have been about the same height. The RSI is in the overbought position, but that's to be expected when we've seen such a steep increase over the last couple of weeks. We pretty much have gained almost 1,000 points over the last month and a half. Stochastic showing across over the last couple of weeks, and you can see for sure from the previous week's close to this week's close has been a significant growth in the index itself, and so obviously momentum is there. So looking at the 3-year weekly chart, you can see strength is with the index, momentum is with the index. We're coming up to the 13,500 mark, and if we're able to break through that, 14,000 and 14,005 could be in play over the next, 6 months. We still have to wait and see what's going on in the U.S. in terms of the Fed, Janet Yellen becoming the Fed chairman, January 15th being the fiscal debt date that they've set out. So we could see a contraction coming soon. But for right now, in the short term, things are looking good on the TSX. Looking at the 6-month daily chart, this is the highest point we've been in 6 months. And we had a short week this week, with Monday being Remembrance Day in Canada and Veterans Day in the U.S. But as you can see, Monday was a little lower. Tuesday picked up. Tuesday, Wednesday, Thursday, Friday was really strong for the index. We had some positive news coming from the Fed. Positive news coming from chairman, etc. So good news all around. I gave this a green because we're about to cross over, it looks like. Technically it could be a blue, but I'm being positive as we've seen the upswing starting to occur. On the more important side of things, we do see the RSI coming here at the 70 mark. Very positive, not quite breaching that overbought position, and we do see the stochastic sharply increase from Wednesday to Friday. Hopefully the momentum can continue to kick in throughout the rest of the next week with earning reports coming out and other important economic measures. The Fed keeping the stimulus in play for the time being. Canadian government thinking about adding stimulus as well. Money will be flowing. Things will be good. I expect next week to be fairly flat, I would expect, between 13.4 and 13.5. If we do break through 13.5, you will continue to see the index move higher. Here is the index versus its indices. And to note, we've seen the consumer staples sector fall underneath the Toronto Stock Exchange. So now it's underperforming the exchange. And this is a significant decline. And you can check the blog for the Loblaws and other grocery market updates. There's a post there. We also see materials, gold, and mining all continue to fall. Conversely, we see energy continue to rise. Financials have done astoundingly well, a very strong appreciation over the last 2 months, I would say. And consumer discretionary, again, outperforming everybody else. So things of note, things have changed. Consumer staples has now fallen into the underperforming categories. Energy is doing just a little bit better than the market. Financials have taken off, and consumer discretionary continue to lead about all the indices. Looking at the consumer discretionary versus its components, and you can see Magna continues to outperform quite handedly compared to the index itself. Gildan Athletic Wear is coming down a bit. The blue here is Canadian Tire, which is outperforming the index. Thomson Reuters, Tim Hortons, and Shaw all continue to underperform, but looking at the index itself, we do see Shaw starting to turn around, Tim Hortons coming down, Thompson's coming down. But again, the outlier is Magna continuing to pull the index higher and higher. Looking at the energy, TTEN, we see the underperformers here in green are in Canada, heading straight up, so a positive opportunity there. The orange is Husky Energy, again, moving higher. And that's definitely got to do with the oil sands investments by Warren Buffett. Synovus, again, turning up. So there's a lot of upwards movement here at the lower end of the index, which could present buying opportunities for those of you who have done your homework. The gray is Talisman. This bright blue here is CNQ, which has jumped significantly. The purple here is IMO, and Suncor here in the brown. Both continue to be part of the Focus 5 and continue to outperform the index by about 5%, 5 to 6% here. So opportunities for you if you're looking for a little more risk. We could have seen the move finished by in Canada, but again, oil sands investment is beginning to continue to occur, so it's something that you want to look out for. Looking at the financial index, remember the major banks and the major insurers. We have the gray here is Royal Bank. I would say just barely underperforming the index itself, 17% compared to 17.46% for the index. We have CIBC coming in below, BNS coming in below, and Laurentian Bank coming in below. Aside from Laurentian Bank, out of the three underperformers, you can see they're all turning up. The darker green is TD, continues to move higher. The blue is BMO. This purple color is Manulife Financial, coming down a bit. Same with National Bank, and same with Sun Life Financial. So we did see some positive rate announcements by the U.S. and Canada. So even though insurers have pulled back a little bit, they're still quite outperforming the market. We see TD and Royal Bank both approximately about the index is the growth. Royal Bank, again, is at 17%. The index is at 17.46%, and TD is at 18.39%. So with the Focus 5, they're still doing quite well on the financial side of things. But again, there is room for growth. We're going to take a little bit more of a risky play with BNS here and even CIBC, as they are underperforming the index but are heading higher. Looking at oil, not a pretty picture. Since pretty much September, 4 weeks of September, we've seen a high of 110, and it has just fallen all the way down to 94. Not a great sign, not a good thing for oil producers, because obviously they're getting lower pricing for their product. It is not what we want to see. We want to see oil continue to stabilize above the $100 mark, as that's where OPEC would like it to be. But again, this is just what the market is, so we have to be aware of this as a benchmark driver that oil is falling. It's staying at around $94, so I'm not too concerned about it heading lower. I would expect it to base here for a bit before heading higher. But again, without any real conviction from the media in the Middle East, we won't see oil move higher on that topic. Looking at the Enbridge chart, 3-year weekly. Last week was much better. This week we closed lower than we opened. Not what we want to see. But again, we did close above 45. The index, or the TSX, was up 51 points on Friday. Enbridge was only up 15 cents to 45.25. But we have a crossover in the MACD indicating strength is with the index. And as you can expect, the RSI and stochastic crossing down is definitely due to the downward movement for the week. So even though we did close at 45 or above 45, that's a great sign in terms of strength. In terms of technical timing, it wasn't the best week for Enbridge. Looking at the 6-month daily chart, you can see Tuesday was the high of the week. Wednesday, no good. Thursday, we did break through 45, but Friday we bounced up. And the good thing about Friday is if you look closely, we closed higher than we opened. again, up 15 cents. So while the MACD did decline here and cross under, and the histogram bars declined, we do see the RSI is starting to turn around from the Thursday, Friday, and we are at an inflection point here on the stochastic. So I would expect next week to see some positive appreciation from the 45.25 mark up to potentially even 46. And that's going to be attuned somewhat to the price of oil. If oil continues to fall, we will see the entire energy sector suffer, regardless of whether it's an oil play or not. So with oil being the basic driver, that's what we have to watch out for. But again, I would expect Enbridge to turn around for the rest of the week. Imperial Oil, 3-year weekly chart, great sign, great movement. We see close much higher for the week, positive appreciation. So if you had it around 45, it's sitting around 46 almost. It broke through 46 at $1. Hopefully you took it. If not, I would expect Imperial Oil to continue to move higher as soon as oil prices rebound. Looking at the MACD and the MACD histogram bar for the week before is about the same, but it's shorter than 2 weeks ago. So it's a declining trend, not exactly what we want to see, but this should help us move higher, because if you notice, we had 1, 2, 3, 4 weeks of declining growth, and then last week, or this past week, we moved higher. So hopefully the trend has turned around. As you can see, the RSI believes so. It's turned up higher, heading towards the 70 mark. Stochastic, more emphasis. We do see it move higher at a more steeper rate. So that's a good sign when the momentum is into the long-term play. And the MACD still being positive is a very, very positive sign of things to come. 6-month daily chart. We did close down 5 cents to 45.97. So Friday's close was, just a bit under the 46 mark, which is fine. Some people taking profits. We're still, looking fairly well. Tuesday, Wednesday, Thursday, Friday, great appreciation. You can see the MACD did cross over here on the Wednesday. So very, very Wednesday to Thursday mark. So that's very good for us to see, showing that strength is there. Obviously, stochastic and RSI are showing a bit of a flat move because we came from the high down to 45.97, and that's probably at the same place as Thursday, but that's okay. We do see it's still positive, chance to turn around, and with oil continuing to move higher, as I expect it to next week, this will turn around. Suncor, 3-year weekly chart. We couldn't break through 37.50, but we did have a higher close than an open for the week. Positive sign. Here we see the stochastic crossing through, RSI heading up, so momentum is with the stock, but we do see here pretty much flat on the MACD and the MACD histogram. Not sure why it's flat, probably because of coming down from here and coming up. I would expect it to cross over, and if it does cross over, that means we're breaking through 37.50, and that's obviously due to oil prices, again, rising. So oil, again, huge benchmark for the energy sector. Momentum is with the stock, especially with the close higher for the week than the open. Looking at the 6-month daily, Suncor closed up 13 cents to $37.36. We do see Tuesday, Wednesday, Thursday, Friday. 37.36 is 14 cents off the 37.50 mark. So once you break through that, 38 is definitely in play. And you can see a couple weeks ago we had the highest at above 38 for the last 6 months. So that's great news to see. Stochastic at an inflection point, still kind of positive, but I gave it more of an inflection point. RSI slightly heading up, but not enough to convince me to give it a green circle. Now, the MACD and the MACD histogram is pretty much at an inflection point. If it crosses over, great buying signal. Again, positive news, and which would be followed by oil obviously increasing. I would expect a bit of a pullback in the early part of the week before it turning up higher, as long as oil continues to move in the right direction. Royal Bank, I mean, here we go, 52-week high, highest point it's been in 3 years. Green on the MACD and the MACD histogram is good, same size as last week. RSI is in the overbought position, but it's still good. And we do have a crossover, or at least a touch and higher on the stochastic. Momentum is there. Strength is there. We closed higher than we opened for the week. It looks like you cannot lose with Royal Bank right now. It's been up since pretty much July. July, August, September, October. We're already 5 months in. Continues to move higher. Strong appreciation. And if hopefully you've been able to make money off of this stock. 6-month daily chart, Royal Bank closed up 32 cents to $71.30. Now, not the high for the week, but again, still closed higher on Friday. MACD and the MACD histogram are flat, and we see the potential crossing over. I would expect it to cross over again, have another buy signal as strength does push the stock higher and higher. Momentum is there. You can see the RSI while just breaking through the 70 mark and entering into the overbought position. You can't help it when the stock continues to move higher and higher. We had a nice period of basing around the $70 mark before we saw Wednesday, Thursday, Friday. And here we see the stochastic crossing up as well. Good news in terms of momentum. But again, 3-week, 52-week high, highest has been in 3 years. You can't, knock the results from pretty much July when it was at 60. Now it's at 71. So that's a great long-term play, good dividends as well. But again, you have to be careful. If you're not comfortable, there was a blog post I believe Jonathan made about everything's too high. Read it over, go through it. PD, another mind blower here. If you look back, highest point it's been in over 3 years. I mean, it just keeps going up and up and up. MACD and the MACD histogram continue to be positive. RSI is at 76, so it's in the overbought position, but it continues to move higher. Stochastic still has room to grow before it reaches its 100 mark. Momentum and strength are with this stock, and it just cannot put its foot wrong. PD on the 6-month daily chart, it closed up 58 cents to $97.33. Again, higher close than it opened, very positive sign. MACD did cross over, or at least it touched and moved higher, a good sign. RSI is in definitely the overbought position, but continues to move up as the stock moves higher and higher day after day. Stochastic, again, touched and then bounced up. So momentum with the stock, strength with the stock. It's hard to say when these two financials are going to turn lower because they just continue to push week after week after week. And even though there's a period of basing, you can see here a couple of days it stayed around 96, 97, just continues to take off. When overall in the long picture, it still is looking quite well. Now we look at gold here, still down 10.9% or $157.90 from in that 6-month period. But closer on the right-hand side of the screen, you can see it has moved up over the last couple of days. So obviously that's going to positively impact some ETFs and negatively impact some others. So our iShares Gold Bullion Fund, CGL, fair enough, it opened and closed at the same price at $11.45. So we saw Thursday or Wednesday, Thursday, Friday, some appreciation down from the Tuesday's low. So that's a good sign in terms of momentum, but it couldn't break through the $11.50 mark because the appreciation in gold pricing wasn't that strong. We do see the MACD starting to flatten out a little bit before turning higher. This will not turn higher until gold prices start to strengthen for a longer period of time. We've seen too many days where it's up a couple days, down a couple days, down a couple days, up a couple days. It's very volatile, and the trend has been negative. So, yeah, we've seen a couple days of good growth. Not wholly convinced that prices are going to continue to rise in the near future. The Gold Bull Plus ETF, otherwise known as HGU, was actually down 26 cents to $8.36. You can see on Friday here, the close is lower than the open. MACD is still negative, nothing going well there. Inflection point on the stochastic, RSI is heading down, so not a lot of strength and momentum in this ETF. Again, if you're looking to make 1%, a little more difficult. If you're looking to park some capital and hedge against inflation, while taking a bit of risk. Again, you can see you're better off getting it closer or below $8. Looking at our silver bull, we're flipping on the silver right now, the bear plus ETF. Again, not great on the stochastic and RSI. Momentum not really there. You can tell that prices are appreciating instead of depreciating. Looking at the silver bullion ETF, SVR, not great. Silver not really moving anywhere, so again, the ETFs won't move. Nothing looking like a buy price here at all. And the silver bull plus ETF, again, nothing great. We see prices for all the silver ETFs relatively flat. Silver prices aren't moving, so nothing to get too excited about. So that's it for us this week. Here's my email: questions, concerns, comments. I love feedback. If you want me to omit something, if you want me to add something, please let me know. I'll definitely get it in if I can. Check us out at www.traintoinvest.com/blog for a ton of different information. Some of you come to the YouTube, some of you come straight to the blog, but also check out our website. We have started a stream of classes again, but it's not too late to get in. Again, email me if you have any questions, concerns, or comments, and I look forward to talking to you guys as usual. Have a great rest of the weekend, and we'll talk to you soon. Bye now.
The organizer